Hi, thanks for tuning in. This is a weekend rundown of the markets. Currently looking at a chart of the S&P 500. It's the weekly chart. This gap back here, still here, brings into question what type of gap is it. Has not been filled. The bears can't get anywhere near it. PPO starting to get distance between the red and blue. Continue to buy the dip and SPY. What I like to do is create an alert at the 20, trigger on a 30-minute chart, something like SPY buy alert, weekly SMA 20, slope is up. Keep that in the system. But that'll be the next good swing entry. Obviously, this gap getting filled is what the bears want to see. The longer it goes without getting filled, it's going to be hard to not want to buy the dip, right? So there's only 4 types of gaps. Just your common gap, an exhaustion gap, a runaway gap, and a breakaway gap. In this particular instance, it looks like a common gap to me. There just isn't enough volume accompanying the gap. But that being said, 400 stone cold buy. The daily chart still just rising higher. PPO bearish, but about to cross bullish again. The bears had a chance to keep the bearish divergence going back here at the start of April. And that's that same gap on the weekly that I'm talking about. The reality is, this is not a bearish divergence anymore. This is very bullish. This looks like a 1, 2, 3, 4, 5 wave 3, completing this week likely. Sometime up here around 426. It's hard to be bearish. Like I said, the time to be bearish was the beginning of April, and when the bears did not stuff the bulls on this new all-time high print on the first, that gave the bulls everything they needed to continue higher. So, like I said, 20 on the weekly is where I'm looking. They just tagged the 20 on the daily. It's been good for quite some time. I'm not touching the 20 on the daily anymore. And what the bears would like to see, right, would be a new high this week on a bearish divergence. And that would set up a short opportunity. But until then, long and strong. IWM small caps, I think this is where the money's going to start flowing again. If you go back to, March lows with the VWAP, etc., you'll see that they're building this massive volume shelf up here. Everyone was waiting for a dip. I was waiting for a dip into the 170s. Never got it. All right. There's 2 ways to correct. Right. You can correct in price and you can correct in time. This obviously corrected in time. We've now gone nowhere for 4 months. Or 3 months. Sorry. PPO all the way back to 0. Went negative. Crossed bull. Now back bear. Moving averages are literally... The slope is 0, could not be any closer to each other, are all on top of each other. So this is telling everyone that there is no trend in IWM. They're consolidating this recent move. Looking at the weekly, continue to ride the 20. Now, given this pullback here, it's entirely possible that was your correction, right? You have the volume for it. However, PPO bearish on the weekly. If this is a wave 1, in this return to work over the next 2 to 4 years, context of a bull cycle type thing, what you would anticipate is PPO to come back to the 0 line. It doesn't have to go all the way to the 0 line, just back towards the 0 line. But at this point in time, the bears can't get through the 20 on the weekly. The slope is up. All the moving averages are right where they need to be. The structure is a bull flag. It's a very obvious bull flag. The sellers are diminishing. And as soon as we see this PPO start to curl back up, we can get aggressive in small caps. Until then, there's literally nothing going on, right? And if you wanted to draw a balance area, you could certainly just put a big bull flag, corrective rectangle here. And I think price will continue to remain within balance for the remainder of May. If she gets above 235, then we've got something else to talk about. Let's take a look at the Qs and tech, right? I think this looks really good. I love the symmetry here of this move and this move. So an A, B, C, running flat type of scenario. I think the correction has ended. We did get PPO all the way down here. But it was a lower low, right? So the momentum was stronger for the bears, but they couldn't get a lower low in price. They could just get a lower low in momentum. All that being said, right, I'm anticipating a run up to 350, 360 before an ultimate pullback. She's in an ascending channel, right? This is a balance area that's moving higher in time. She's in an impulse structure. What the bulls would like to see is a bullish divergence, right? So even if she does march higher and maybe even false breakdown, fill this gap at 325, we would anticipate the PPO to put in a higher low relative to negative 1.6 or so. So right now everything looks fine. Even if she were to get something like this, you'd be very bullish. This would be a stone cold buy at the 200. So I've got the alert set at the 200. We've got this POC going back 2-3 years at 311. This is 300 to 311, right? This is a very strong support zone. The moving averages are showing you indecision, right? But overall, price is moving higher and trying to get back above the 10 and the 20. If she can get back above the 10 and the 20, it will indicate that the consolidation, this most recent consolidation period going back to the beginning or the middle of April, has ended. This ABC right here into the 40 has ended, and the fifth wave can begin. So I'm buying the dip against the 40. We lose the 40. I fully anticipate coming back down to this pocket 310. Looking at the weekly, you can see, she's been hovering around the 20. The 40 has been able to come all the way up here to price. Everything looks good. But here's the problem, right? You do have a bearish divergence in the Qs. Right? So higher in price, lower high in momentum. So it's also important to note that the blue line is still below the red line. That being the case, we've got to see the bears take out the 40 before getting too bearish. If they do, it's likely they're going to come down and tag the 40 on the weekly. And ultimately, before rolling over, they'd have to get down here and break below 300 and close below 297. But like I said, I love this symmetry right here between these two moves. Now, that being the case, zooming out to the monthly, you see nothing wrong. The trend is up, PPO bullish, it's curling in, but I don't really see a problem with the Qs, right? We break down early this week, then we have a problem with the Qs. The two strongest sectors have been XLF and XLE. I do believe these are a bit long in the tooth. This does look like a wave 3 is coming to an end. We were buying XLF back here and back here, and we were selling XLF up here. We did not buy back in for this last run. All in all, still a good trade. We are happy to buy back at this gap. If you zoom out, though, this is where I get a bit worried. The monthly, right? So there was a lot of selling back here. This was the financial collapse in 2008, 2009. We have a clear 5-wave structure higher. The question is, right, was this your 3, 4, 5? that ended here, putting in an ABC lower. Or was this your 3, 4, and we're in wave 5 now? And what we would anticipate would be wave 5 would be equal to wave 1, which means we could be heading to 50 or so. That's up to anyone. At this point, I would argue it's easier to ride the trend than it is to try to guess a wave 5 top. So, especially on a monthly chart. That being the case, we're going to continue to buy dips into the 40. We don't want dips into the 20 anymore. They've been used up. Right? This will be the 4th dip in the past 2 months. Not worth it, right? Hung around here for over a week. Another week here. So we want SMA 40 or lower. This gap on the daily looks very good, but ultimately I want to show you guys this gap here, right? This would be the buy, I believe, of Q3 or of June. I think it's going to take time to come back down here. It certainly will be something, either a flat or a zigzag, right? Just lower that down like that. But we will come back to test this area at some point. PPO is still very bullish, so this is not over yet. Closed at the high on the week. The problem I have with this particular setup right now, extended from the 20, hasn't touched the 20 on the weekly since November. That's a problem. We're going on 7 months of not touching the 20. So when she touches the 20, stone cold buy. Until then, we need to see how this plays out. Because if you use your fib extension tool, this being a 1, this being a 2, your 1618 is at $38. So it's very possible that we could be approaching a wave 3 high. If you look at this is your 1, 2, 3, 3, 4, 5. I'm not really sure. I always have problems identifying a 5 or a 3. Often they look very similar to me. So I rely on volume on the daily. I rely on candlesticks to tell me that selling has begun. But there is this beautiful bearish divergence setting up on the XLF daily going back to November. It exists on the weekly as well. So as long as that exists, you have to be very, very careful with the long position, especially if you haven't taken any profits, having been in this since the early 2021 or late 2020. But XLF is hot. The other hot sector is XLE. I have a similar problem here. Maybe this is your 1, this is your 2. So ExxonMobil could be heading to $65. There's a lot of gaps up here too. I believe strongly that oil is going to outperform for the rest of the year. I don't see this trend stopping anytime soon. It was in a 10-year downtrend, and that downtrend ended in March. It's pretty hard to go any lower than negative. So I think it's safe to assume that the trend is up. A long-term, yearly type chart, yearly reversal took place last year. It is safe to assume that the trend is up, despite on the monthly charts being below a downward sloping 40. That being the case, we're still looking for overhead supply up at 57 to 64. So in no way, shape, or form are we looking for XLE this week or next week. XLE, XLF, avoid. The risk reward is just not favorable. Upside on XLE is about 7%. Potential downside, maybe in a bullish scenario 13, in a bearish scenario 25. So 1-to-1 at best, 2-to-1. Not really the risk reward you'd like for a long, and also not the risk reward you'd like for a short. Closing it high on week isn't bearish. It's very, very bullish. This little ABC back into the 20 couldn't even couldn't even hit the 20. Perfect test of what was resistance is now support. I would fully anticipate bull flagging, maybe even come up here, flag at the 200, allow the 40, all these other moving averages to pull up over time, let the correction begin, put in maybe a flat, a high tight flat, wave 4, maybe even this is wave 5. It's hard to tell. The complete count doesn't really matter. That being said, we're going to take a look at some stocks and some ideas that we have for the week. I really do like the pot stock sector twofold. A, if this is breaking down, this is a good short. And B, if it's not, then it's a great long. The SMA 40 was lost, but SMA 50 had held. If you look at a monthly chart, we're right down here at this monthly gap, right? Open here this month was 24.92. The close was 24.64. So that gap, I believe, was the target the whole time for this correction. This is a zigzag, is how I'm viewing this. 1, 2, 3, 4, 5. ABC up. 1, 2, 3, 4, 5. Right into the 200, close below the 200. We've had 2 false starts for the bulls in the momentum. We have a lower low in momentum back here in April 20th. So that pretty much told the bulls that there was going to be a break of this low, but that would be the dip to buy if, in fact, they could put in some type of divergence. What's very interesting here is that this high is actually lower than this high in momentum. So it's telling me that this could be a wave 2. This doesn't look like some permanent top. I am open to the idea of bearish counts that bring this to $9, $13. As long as it stay above 25, 24, it's hard to be bearish. We are still anticipating a bounce. I would not be getting bearish unless we close below $24, $23. Then it would just be a quick scalp. If that were to happen, this divergence would be off the table. But this falling wedge has completed. The power of 3, 1, 2, 3, is everywhere in the markets, right? So same thing here, falling wedge for Tilray. The volume on Tilray I really, really like. This is a confirmed reversal. The 20 is the problem, right? Got to get above the 20. If they can get above the 20, I think you're going to squeeze these guys, and it does bring in 31. And that's a double from where price is, right? So if you can get above the 10 and the 20, the upside reward is 80%. The downside risk, 17, 18%. So love the risk reward in Tilray this week. Just hard not to see it. Let's take a look at Twitter. A lot of option flow, a lot of volume on this one. Huge gap from earnings. It's still a problem. I do love the symmetry on this. I think 51.75 this week is probably the buy. If that's not the buy, then it's entirely possible 50.38. If not, down here at 45, $44. So watch for Twitter to either capture EMA 5 or come down here, break 52.34 one more time, tag 51.75, and reverse from there. This is in a long-term uptrend. It did just hit a brand new all-time high back in March and February. That's what makes it interesting for me. This stock had hit an all-time high about 10 years ago and has been lower ever since, right? So 2013. So this is a huge cup. If this is a handle, we could be in for a very, very long uptrend. If not, this might have to pull back like I've been talking about down to the 40s. Next name we're going to take a look at is everyone's favorite ARK-K. ARK-K is breaking down, but I will say the PPO is set up here to put in a higher low, which is very, very good. We do have an H pattern here, which is hard for a short to step in here because we haven't touched the 10s, at 118. If you call that your risk level, you're pretty far from risk, right? The people that wanted to get short got short here, right? Or they got short here on the break of the 20. So, closing below the 40, it's got that same look that CGC has. Is this a bear trap? Are they going to regain 114 or 115 to start the week? Or is this going to ultimately see some market symmetry here and have 2 more down weeks where we get something like A is equal to C? We come into a 50% correction down around 90. So that's what I'm watching for, but it's not lost on me that they broke this low and reversed, right? And then set a new high relative to the May 6th. So it's on my list. A lot of these small cap growth stocks are back in play, in my opinion. I do like Penn this week. Same scenario. Maybe she comes down here to complete the symmetry. Maybe that's it. Maybe the 200 was the target. It is at the bottom of this falling wedge. However, come down and tag 73 and I'll buy her. Get up here above this gap and I think it's safe to buy higher. NVIDIA, another name I like, looking for wave 5. They're building a lot of energy here. It's not lost on me, this balance area, this bull flag. And if this is some bull run, there's no reason that this can't come all the way back up and at least challenge this high. The bull cross is there. In doing so, it brings in the balance area profit target of around 740. Putting your risk level at around the 20 on the weekly, 550. This is pretty good risk reward coming into the week. 26% upside, 8% downside, about 3 to 1. That being the case, let's take a look at gold and we'll wrap up on that. Gold did fake me out here at the 20. I did ride her from 31 to 36 though. That was a good gain. I'm not worried about not getting the last bit here. A close above the 40 on the weekly, breaking out of this area, very bullish. A close above the 200 for the first time since January, very bullish. PPO crossing up. The doji from Friday is what has me worried. I also see a potential bearish divergence if in fact the bears show up. I also don't like this gap and then gap again. So now we have 3 gaps unfilled going back to April 30. This is not good structure. It likely will be repaired at some point. So that is where I'll be looking to buy. If you look at this as a leading diagonal, one could assume that the 3064 low is the low. That is now our invalidation. We would look to buy dips into 35 down to 33 in the coming week or two. I don't anticipate that's the structure we're looking for. I don't anticipate this getting filled right away. You probably don't want the first dip, right? We're going to want the deeper correction for the next swing entry. And I guess one more to talk about is Airbnb because they have earnings this week. So Airbnb, we were watching for this 1-2 type of scenario. But it certainly is still in a corrective phase. The moving averages are now trending lower. This is trend mode. Close at the low on the day, close at the low on the week. PPO full on bear. ABC zigzag in play, leading diagonal zigzag. This is the textbook Elliott Wave 1-2 combo. With people starting to travel again, with people returning to some sense of normal, I do see this one coming into play in the next month or two. So the levels I'm watching this week are 142.60 to 143.72. Worst case scenario, 135.91. Below that, the probability that we are going to break 121.55 increases dramatically. So I will likely avoid this stock until after earnings, unless I am given extreme weakness and a sign of a reversal to trade against. So that would mean, I think the earnings are Thursday after the bell. Monday, Tuesday, Wednesday, they sell her off. Wednesday, they close strong, right? And then Thursday, we've got something to trade against. I might scale in before earnings and then add after. But at this point, this is a low priority trade for me. Simply waiting until we see signs and signals that this correction has completed. Once we have that, we will have something to trade against. And if you have a level at which you are wrong, we then can develop a trading plan. We can look at risk reward. We can know an invalidation, a stop, and we can define profit targets, etc. So until we have a reversal on the daily, this stock is an avoid. And for that matter, all IPOs are an avoid. If you like the material, come check out the channel. Find us on Twitter, MarketWizard87, or on YouTube. Like, comment, subscribe, and come check us out.